देख रहे हैं डीडी नेशनल, देश का पहला चैनल, देश का अपना चैनल।
So I'm little confused. What are you? An advisory app or an NBFC?
We are a personal finance management app.
How come you can compete in this industry which is highly competitive,
Right.
funds driven,
Right.
and large mammoth players are finding it difficult?
Right.
The end result will cause damage to the investors.
Yes.
Let's talk straight. What are you going to do with that 16 crore rupees? I need a breakdown.
All right.
Will someone get the offer they're looking for? Well, this is episode 4 of Elevate. These young boys began a company called Interval. Mr. Ramesh Ali CK right now to come up on stage and present that idea.
Hi, I am Ramesh Ali, co-founder and CEO of Interval. I'm from Kerala, India. I'm a graduate in BBA LLB Honours degree from Government Law College of Kozhikode. And I have got an EPGM from IIM Indore as well. Interval is basically a one-to-one learning platform for kids from K-12 sector. We have taught over 6,000 plus students in 30 plus countries in 2 years. So happy and proud to be here representing Interval in this session held in Dubai.
Before going very deep into my product, I would like to start with a story, which is a very necessity to establish the importance of our product or the problem we are solving. I have a student. Actually, I was a maths teacher for 4 years during my college studies. I have a student, he was in 4th standard when I met him 2 years before. This kid has a severe problem about his education. Like he kept on changing school thrice in 4 years. So the basic reason why he kept on changing schools is that he doesn't like his maths teacher. He just doesn't like his maths teacher, so he's very less motivated to go to school. So this made his parents also in trouble. So I come up with this student and I just went deep into that. And the reason I understood is that this kid particularly skipped 2 lessons in his earlier classes, which made him the entire subject difficult. The lessons he skipped was the remainder part of the multiplication. So this made him feel difficult, that multiplication is difficult and division is also difficult, and all the chapters in mathematics is difficult because arithmetic progression is basically needed in all the chapters. So if the kid has received or got a 10-minute personal attention by his class teacher or maths teacher or his parents are also involved in this. They couldn't identify it for 4 years. If he had received 10 minutes of personal attention, his life would have been much smoother. So that's where we come into this space. We focus on personalized education, and we have taught over 7,000 students in one-to-one manner across 30 plus countries within 2 years. So we were incorporated in 2021. Now coming to Interval, as I said, there are different kind of students in a classroom. They learn differently. They have a different pace of learning, but the teacher do always focus on one teaching methodology according to their style at an average pace. So mostly 99% of the student doesn't get benefited out of this. So that's where we come. We focus on like 1,000 plus courses are there. All of these courses are conducted in one-to-one manner itself. So this allows us to make education personalized and make sure that no child is left out. So I'll move on to my business. Directly going to the traction, as I said, we were incorporated in 2021. In the first year, we had a revenue of 3 crore, INR 3 crore. In the second year, that is the last financial year, we have a revenue of 8 crore. So that proves that the CAGR, like the annual growth was 214%. So, and the next year, in the coming financial year, without funding, we have been a completely bootstrapped company. Without funding, we'll be having a net revenue of 42 crore in the coming financial year. So that's all about the financials. And I will come to the competition. As I always have believed that EdTech is not so friendly name. There are very big players, both for investors and parents in the current market. So coming to the competitors, big players like Byju's, White Hat, or Extramark doesn't focus on personalized education. They do provide recorded classes. But the direct competitors in the current market are Vedantu and GoStudent. Having a slight differentiating between these two and us, GoStudent, which is a very big company and raised almost $600 million from Tencent and all, is just a marketplace where the parent can come and purchase a tutor, but they can't question the company for the outcome of the kid. And Vedantu is more similar to us, but Vedantu has proved that EdTech, especially one-to-one learning, is not scalable for them. But for us, it is scalable, sustainable, and profitable because we have our P&L with us. And coming to the main point why our business is scalable, our operational cost is 400%. I repeat, 400% lower than our competitors. So we have built a system where we could scale it up to any country at any levels. And going to the next KPI, which we consider as our growth and our success, which is not so seen in other edtechs, that is the customer happiness index. So coming to the customer happiness index, we have got a rating of 4.7 rating on Google. But the thing is that we have got an NPS score of 86, and there are like thousands of parents who have purchased repeatedly for 8 to 10 times the courses available in our platform for their kids. So this is the KPI which we see as our success and our growth, other than any valuation or other thing. And this is our founding team. This is a very versatile and young founding team. And I'm the second one from the left. The first one is Accelerators. He has got a psychology diploma in child psychology. And the third one in the picture, he is Shibli Amin. He has got a degree in literature. He's dealing with the academics. And the fourth one is also a psychology guy. He's more into parent psychology. He deals with all the business development and marketing and all. And the fifth one is Najim Ilyas. He is also one of the founding team member and a chartered accountant who deals with all the MIS finance and everything. So this is our very versatile founding team. And I'm here to raise funds for my company. We are planning to raise $1 million, which is 8 crore rupees. Currently, we are at a net run rate of 15 crore. We have generated a revenue of 1.3 crore in the last month, out of which 35 lakhs was cash flow positive, including all the debt repayment and all the interest, everything. So we are here to raise $1 million at a valuation of 10 million, 80 crore approximately. So yes.
The pitching and the excitement will continue right after these messages on Elevate.
Dad, see what I've made.
Wow, that looks like our new home, huh?
It's as simple as this to make your dream home come true with Bank of Baroda. Easy home loans in UAE and India with simple procedures, quick approvals and low interest rates.
Dad, let's go for a drive in a new car.
Let's go!
Drive your dream car with Bank of Baroda. Speedy car loans at low interest rates. Imagine it and it can be yours. Bank of Baroda, India's international bank.
Upstocks. We are India's largest broker, loved and trusted by over 1 crore customers. Our powerful platform simplified many things for traders and investors. From learning, analyzing, researching to stock picking. Our customers can do it all.
Welcome back to Elevate. The pitchers have presented, the investors have now got questions on their minds, so let's go hear them.
You have said that 160 members are there in terms of your hardworking for your company.
Yes, sir.
So what is your monthly burn rate?
We almost pay 35 lakhs
Okay.
monthly.
Your revenue You have not mentioned about EBITDA last year and EBITDA currently you envisage.
Yeah, we were not in EBITDA positive in the last financial year, but considering the last 2 quarters, we were EBITDA positive.
And you are valuing at 20 million?
80 crore INR, which is just approximately 5x of our net run rate. And as I said, these 160 people are non-teaching members. We have over 6,000 teachers working as part-time by signing an MOU.
But what is your monthly burn rate? Exactly tell me what is your monthly expenses on teachers,
Yes, sir.
both full-time and non-full-time.
It goes on an average 20 lakhs, yes.
You said that's not 32 lakhs.
See, no, that is for non-teaching members, and for teaching staffs, it's 20 lakhs. It is very seasonal because for during the exams, it goes very high, the number of sessions.
Okay, fine.
And yes, off season, it is very low.
So as of now, you are negative.
In the last financial year, we were negative, EBITDA negative. In the last 2 quarters, we were EBITDA positive.
Okay, thank you.
You said that you're differentiating yourself from Vedantu and Go Student by the fact that they don't take any responsibility for the tutors that...
Only the Go Student, not Vedantu.
So what is the responsibility that you take? So the teachers are trained by you. If something goes wrong, if the student, for example, is promised that he'll pass the exams and he doesn't, what can you do in this?
Exactly, I understand. We always do provide 100% refund. During our admission, during our sales procedure, we convey this to the parent also. There is a 100% refund policy, which has some terms and conditions they will have to prove, and we have our own system to track it. Everything is there. But there is literally 0 cases for refunds due to the lack of efficiency or lack of outcome.
I know Go Student quite well, so Felix, the founder, is a friend. A lot of their growth has been underpinned by M&A. So I just wanted to ask you, what are your thoughts longer term in terms of growth? Have you thought about acquiring other companies in organic growth?
We do have different kinds of channel because education is not only delivering tuition. Like we have our own products, we have our own books. So it's like we have many pivots coming in the next years, which will make us sustainable. So this is, of course, a long-term project, not something that we build and someone like Byju's come and acquire us. It's not something like that. We have some long-term projects.
And just very quickly, has it been bootstrapped to date?
Yeah, completely bootstrapped. Like 100% of the stake is with the founders.
Got it.
EBITDA negative. How much was the negative?
2 crore.
2 crore.
Yeah,
Who put in 2 crores? You founders?
No, debt.
Debt?
Yeah, debt. We raised
how much debt is there on the company?
6 crore approximately, yes.
6 crore debt. Total revenue, how much you generated?
12 crore.
12 crores. And you burned 6 crore. At what percentage you have this debt at? And from who?
Yeah, it's from individuals basically. There are HNIs and there are some family, friends, everyone. Like it's lower only, like ranges from 4% to 10, 50. Yeah, like there are few people from 15% also.
How much is your total expense, monthly expense?
In the last month, it was, roughly 98 lakhs, yes.
98 lakhs, 1 crore. So out of 1 crore, you said there are salaries that you have paid, there is interest that you have paid,
yes,
everything
exactly.
is covered.
Everything.
Okay. Now I'll just make a few points, and then, as I said, as I wanted to say is that your business is interesting, but the only challenge that I feel, there are a few. One, that you don't have tech in your teaching mechanism. I just went through your, there is no tech involved.
Exactly.
And there are multiple small players available in India who are into the similar space of teaching one-on-one. And some might be just the aggregators, some might be just connecting teachers to the students, and they are at different price points. But having said that, there are multiple of them. So there is a huge competition. Secondly, I feel that there is not enough geographical diversity amongst the founders. So I feel that that will reflect in your business also. Assuming that your students would also be from geographically, most of the students would be from the same geography.
Exactly.
South of India, right? Now that will be another challenge in terms of growth. That is my understanding. Thirdly, EdTech is a space which is already under a microscopic lens. People don't want to invest. It's a highly risky space. So considering all these things, I feel that you may have a challenge in growing, but still a good startup from start to mid-level where you could be a good story to be acquired. So hence, looking at that, at a fair valuation and after a good due diligence, proper business and legal due diligence, I might be interested in your business.
Thank you so much, sir, for your kind words.
That's wonderful. Ramesh, I thought you were getting schooled today, but you finally found one teacher
I'm
who's
at the age where I am going to school.
right?
Yeah.
Really young. Congratulations on
Thank you so
thinking
much.
big and showing us all that there is really no
Thank you so
limit to what can be achieved. Thank you, Ramesh. Well, that was fascinating. The excitement and the pitching will continue right after this break.
Upstocks. We are India's largest broker, loved and trusted by over 1 crore customers. Our powerful platform simplified many things for traders and investors. From learning, analyzing, researching to stock picking. Our customers can do it all.
Ladies and gentlemen, next up, it is Mr. Padmanabhan Babu with LeShip.
Hi, I'm Padmanabhan. I'm the founder and CEO of LeShip. I'm from Bangalore, Karnataka. With regards to my roots, I'm a true blue-blood Indian, born, brought up and grown up in different parts of the country. From a passion point of view, I'm so passionate that after running a 135 million euro business, I've been passionate enough to come back to India and run a startup. I'm very happy and proud to be part of the Elevate program.
Over the last couple of decades, the way the world has been transacting has changed completely, primarily on account of technology and the way we do commerce, right? So this has led to what we call some of the the parts moving faster than the whole, resulting in silos rather than creating ecosystem. Right? As long as there is no ecosystem, what happens is it results in disparity. It results in non-democratization and monopolize. So the individual stakeholders' objectives tend to take over, the creation of the ecosystem, right? And what we see is a solution to this problem being creating an operating system for this, primarily which is broken down into 3 components. One is the application layer, which sort of interacts with the user, be it on logistics. We started off with logistics as the first application layer to connect to the shippers. So we call that as a transactional piece. Then we have a demand generation component and the finance component, right? And then the platform layer is basically the intelligence layer. It aligns the assets and the components that is required to deliver the end customer satisfaction, right? So looking at the market, right, what has happened is the breaking down of boundaries has actually created, a truly large market, which sounds true to the Vasudeva Kutumbakam adage that we have been hearing. The market is primarily large. Currently it looks at 150. Your GMV is about 150 billion, and the addressable TAM is pretty large as well. By 2028, it's expected to grow to about $1 trillion market with a TAM of about $100 billion. Right? So where are we in this journey? We've had some of these marketplaces where we've been the official logistics partners. eBay has been one of them. We've been there with them from 2019. Over the last 4 or 5 years, we've consistently grown the revenue, double the revenue, many of the times despite of COVID and all that. We are unit economics positive. We cover the entire country, support exporters from across the country to deliver to 220 countries across the world. And we are solution focused. We work in the B2B space, in the B2C space, with a completely digitized, the entire transaction being completely digitized. Comparing ourselves with the other service providers, because we started off our journey being a logistics service provider, we have hence comparing ourselves with the other service providers. Primarily, what happens is the other service providers are focused on just one of these silos, and and if you look at it, it's not a solution-driven, so it's not a solution-driven opportunity. We are tech-driven. Primarily, the entire end-to-end piece is technology-driven. and and using the data, how do we create it as an operating system for cross-border commerce is what we are working on. The application is large. The go-to-market strategy being, focusing on small parcels, big parcels, B2B, B2C, D2C brands, working with the government, MSMEs, primarily in the one district, one product solution as well, connecting them to global markets, right? Positioning ourselves as a full stack service provider, using partners, franchisee networks to sell our solutions to a larger market audience. We have 5,500 exporters already registered on our market, on our platform, and they use our services. And we focus on primarily some of the manufacturing hubs. So people who are aware of the way the Indian market is set up, there are clusters which produce certain products, and from those clusters, how do we operate and help them engage with buyers across the globe and actually fulfill the product end to end is what we do. The ask is for 1.5 million US, primarily 12 crores in Indian rupees. We are bootstrapped, very closely held, operationally profitable, and whatever we have, our cost of customer acquisition has been near zero. Right, we have grown primarily from our intrinsic base that we find in the marketplace. So in order to grow, majority of the business comes from tier 2, tier 3 locations. So we feel that we have to enhance our technology, incorporate native in the technology, make it mobile first. And at every time when we sort of develop new things, we have something cooking in the kitchen. So, we're always working on new incubation and innovation that happens parallelly. So we look at adding some enhancement to the technology as well. From a revenue point of view, we expect to be a 100 crore company over the next 3 years. With funding, we targeting 25 crores in the current financial. We are on target for 12 to 15 crores revenue. Again, unit economics positive. Next year, about 50 crores, and the following year, around 100 crores. Team, Padmanabhan, 25 years in the industry. Kadambari Padmanabhan, my wife was my first investor. I have done the impossible, taken money out of my wife, right? She invested in the company. Ravi heads sales. Bhuvnesh heads operation. Asim's been a family friend, investor and an advisor. And Ashwin is a strategic advisor on the technology side.
It's time right now for a short break on Elevate. We'll be right back.
कहाँ जा रहे हैं? आपका बेटा बड़ा हो गया पापा, और अब हमारा घर भी.
Get quick and easy home loans from Bank of Baroda for your dream home.
Upstocks. We are India's largest broker, loved and trusted by over 1 crore customers. Our powerful platform simplified many things for traders and investors. From learning, analyzing, researching to stock picking. Our customers can do it all.
Welcome back to Elevate. The pitchers have presented, the investors have now got questions on their minds, so let's go hear them.
What are the working capital dynamics?
So very good. It's a very good question. So our segment is broken down into two, big parcels and the small parcel, which is the B2B segment and the B2C segment. In the B2C segment, we are working capital positive, whereas in the B2B segment, we are, we have to fund 45 days to 60 days of credit, right? So eventually we end up funding 20 days of working capital to the customer. So we've been very, very judicious in the product mix, not growing the B2B rapidly because MSMEs need the support, but growing that would mean more money into the working capital rather than investing in technology. So we started focusing on the B2C. Now we see with capital, we can actually grow this further and expand it more to the B2B segment as well.
Do you have profit EBITDA projections?
Yeah, we do. We would, like I said, we have always been unit economic positive. So 15 to 20% gross margin has been consistent because we've been investing ahead of time on technology. That was by last year we were EBITDA positive, right? But when you invest in technology and you have a fixed cost to pay to, at times it becomes EBITDA negative. And we, like I said, fully funded based on our P&L and our balance sheet, funded by banks on OD limits and and small debts.
And I understand the problem of D2C brand in terms of export. So you targeted very good problem, but I want to understand what is the difference in your service you're bringing on board in terms of it's a speed or it's a price point, or are you giving consolidation to the brands? Because if let's say I want to target Europe. There's many countries, so how to do that, yeah.
Okay, I'll answer that in 3 parts. One being many of the D2C brands do not have physical presence in destination, right? So an importer on record or customs duty, if say for example, if you are importing into Europe, you need to have something called as an IOSS, which is a replacement for VAT. The PwC charges $800 per month for providing IOSS services. So we provide that as a, bundled service. So that's in SaaS revenue model that we're looking at building over the next couple of years as well. Currently, it is built into the unit cost of the parcels that we carry. Key markets being US, Europe. There are 5 key markets: US, Europe, UK. GCC is in focus after the foreign trade policy and the new agreement that the government of India has, and we reckon with the large diaspora here, there's going to be a large opportunity for growing some of these Indian native brands into the GCC market as well. And for majority of the artisans, what we see is even though they produce fabulous products, right? They are not able to export it because they don't have the export-related infrastructure, statutory compliance. So what we have done is we provide an exporter on record. We take care of the statutory compliance, and ours is the first company in India to be 100% digital when it comes to export. Right from the time that you book a shipment, to the time that the shipment's picked up, to the payments, to the delivery, it's all digitalized because the workflow is completely digitalized. We have partnerships with Emirates Post here. We have partnership with Destination Post Office. One tracking number is visible across 220 countries. One tracking number that they enter, they can see in any of the 220 countries that the products get delivered in.
I have seen in this space that the promise to delivery, there's a huge gap from the companies. And how you are going to, travel the journey of promise to the delivery actually is a huge problem in this.
So if I can understand the actual gap in delivery that you're talking about, I can address it. For me, the testimonial is that the first customer who signed up with us in the peak of COVID 2019 is still trading with us, right? So I guess I'm delivering, right? Otherwise, you would have not stuck with me. If there is a specific gap that you have in mind, I can address that.
I have huge interest, and from my fund size, definitely we would love to talk to you and go in depth.
Thank you. Thanks a lot.
Thank you very much.
Thanks a lot. Thank you. Appreciate that.
So you said you're bootstrapped so far.
Yes.
How much money has gone into the business?
More than 2 crores has gone into the company, right?
What's the equity holding of the company?
Friends and family. My family holds 76% in the company, and the remaining is held by friends.
Family as in like how much equity you as a founder hold?
Me, 49%.
Okay.
My wife holds, between me and my wife, we hold 49%.
Is she also a full-time worker with the company?
No, she's not. She's not a full-time employee, no.
And if we want the equity to be restructured as an investor, would you be okay with
yeah,
that?
absolutely. We can certainly discuss how do we restructure the equity.
One last question. Your number showed unit economics was negative last year, was it?
No, it was unit economics positive last year. We've never been unit economics negative. We've always been 18 to 20% gross margin. We were EBITDA negative in the last financial year.
How much was it negative?
It was about 52 lakhs, 4 lakhs a month, 4.5 lakhs a month was the burn.
It was going into the technology.
Yeah, we were, we had a tech team, we were putting money on that, and the depreciation that we took on the P&L also resulted in some unit economics negative.
Our fund size is not as big as them, but if we can pull in, definitely we will be interested.
Thanks a lot. Thanks a lot. Really appreciate that.
Congratulations. Thank you, Mr. Padmanabhan Babu. Thank you so much. It's exciting, it's exhilarating, and it's business. This is Elevate. Do watch out for episode 5 for more excitement.
I see a huge potential, but it makes no sense in an industry that's actually going to take off in a big way with the opening up of the marketplace all around the world.
And also the ask, this is the most stupid number which I've ever seen in my life. I mean, मुझे logic समझ में नहीं आता है. Can you please explain me the logic? I'm not as intelligent like yours.
Sir,
so that's like 50 million euros is the valuation of the company.
Absolutely, sir.
Okay. I mean,